Shorts are on the move. Monday is coming up and I want you guys to be prepared, which is why the 3.8% change in the short interest Ortex is reporting, combined with SEC proposing brand new rules requiring short sellers to disclose their positions monthly, means that we have a ton more data coming out. So if you guys want to be able to catch up and make sure to stay up with all of that data, I'm going to be providing it on this channel. So not only watch until the end of this video, but make sure that you guys have already stayed for the long haul. I never say this in the beginning of the video, but try to subscribe because it's going to be able to get you guys there and back from the moon. And make sure that you guys have already slapped that like all the way up to 1,200 because that gets more people to hear this message, because the SEC is really trying to spotlight on potentially manipulative tactics. And we've already seen that the DOJ is bringing these shorts to court. So let's take a look at the new rules, as well as another look at the suspicious options, especially in the money puts at $25 strike. There's about 4 million there. That is unheard of. We saw that on Thursday. And finally, we got to talk about that buy signal still in progress from Lux algorithm. We got to know what is going to happen with AMC and GME this coming Monday. Both of these stocks had trended pretty much along the same levels of resistance and support. GME had a rougher time because its level of support was lower at $118, but that is where it stayed, especially for the after hours. AMC was able to regain its level of resistance here at $17.60-ish, which means that it pretty much stayed flat on the day after a little bit of volatility. But could this be due to the SEC's brand new rules? Let's take a listen. We've been talking about Gensler's new rules for a long time now. Gary Gensler has been circling short sellers for months, and now the Securities and Exchange Commission chief is looking to make a big move. Under a new rule proposed by the SEC Friday morning, some investors would be required to report their short sale related activity to the SEC on a monthly basis, allowing the commission to make detailed short selling data available to the public for the first time. Today, the commission unanimously voted to propose rules and amendments to broaden the scope of short sale related data available to the investing public and to regulators, Gensler said in a statement. If adopted, it would strengthen transparency of an important area of our markets that would benefit from greater visibility and oversight. Since taking the reins at SEC, Gensler has made market transparency a key goal, and short selling has been a major area of discussion, including after the wild short squeeze that took hold of 2021 January on meme stocks like GameStop and AMC. The fallout of the short squeeze resulted in a congressional hearing, and we all live streamed that. If you guys want to hear what it sounded like months ago, make sure to check out some of those videos on the channel. The SEC investigation as well. While the probe did not find any actual malfeasance, Gensler has been hinting that he is still monitoring short sellers. In February, Bloomberg News reported on a sweeping Department of Justice probe of at least 30 short selling firms and allies. So we covered that as well. And now that we are going full circle on the two-front attack on short sellers, as well as the fact that they're running so scared, Ortex is already picking up a detectable change in the short interest. Still above 100 million, still above 20% of the free float, but still, they had to bounce and prepare. Or what exactly? Is it a combination of the DOJ and the SEC doubling down on their investigations? Retail investors have complained that more shares are being shorted than are available to trade, while keeping alive online discussions, market manipulation, potential fraud by short sellers, and the lack of data publicly available around short selling trading activity. That's this. You're watching this right now. Whoever sent this to you, or if you're sending it to someone else, a relative, a friend, someone who is a retail investor that ought to know, there is still investigatable potential fraud. Let's just put it out there. Let's make sure that we are getting these investigations done, and the DOJ is finally keeping their eyes on the prize. Under current rules, firms are required to report short interest data to the Financial Industry Regulatory Authority, FINRA, twice a month. Critics have said that the quality and frequency of that data isn't highly useful, and it's not. Absolutely not. Two weeks at a time with a 2-week delay pretty much means you're a month behind at all times. The SEC's proposed new rule would look to bridge that gap. While the changes to previously proposed SEC rules have been common, as written, Rule 13F2 would only apply to institutional investment managers that hold a short position of at least $10 million, or the equivalent of 2.5% or more of the total shares outstanding. 2.5. Let's look at this number. Is this higher than 2.5? Looks like we are going to see a lot of brand new data pop up because a lot of these specific institutional investment managers are definitely holding more than 10 million or 2.5, whichever one's greater. This means that the SEC would be able to see and share the biggest short sales of individual stocks and aggregate them, providing investors with granular data on those shorts. Firms also would have about 2 weeks into every month to disclose, giving essentially a detailed 6-week look back at big short moves and give a much clearer, if month-old picture of short interest on stocks. This is still not good enough. But is it a step in the right direction? Sure, baby step in the right direction. But we do have to understand that this is going to be able to be fodder for future investigations, which is what we are most interested in. The rule as designed would increase disclosure of what is known as buy to cover, essentially when a trader initiates a buy trade to close their short position on borrowed shares, something that short selling critics likely will welcome, as it would aim to further curb so-called naked shorting, a practice the SEC mostly outlawed in the wake of 2008 global financial crisis. Just search Andrew Mo money. Why is naked shorting still allowed? Naked shorting and Andrew Mo, you'll find something that describes it detailed why naked shorting is still rampant, even though it's mostly outlawed. All right. Overall, the new transparency rule is yet another push by Gensler to bring more market data out of the dark corners and into the light. As he told MarketWatch in an exclusive interview last week, finance is ultimately about trust, and the official sector has a role to help instill that trust through a set of rules on disclosure, anti-fraud, and anti-manipulation. So why exactly is the options chain going nuts? $4 million at the in-the-money put, which means someone's trying to sell AMC at $25 strike, which means that they're going to have to pay the difference in just the amount of money the option costs, and that's per stock. So understand that that is a hefty price for anyone to put $4 million into, which means that these have already been hedged. Nobody's going to be taking a position like this, especially since it is obvious that these are going to be in the money by the time that they expire. Who knows when that's going to be? So if you guys want to be able to pay attention to more manipulative tactics, I'm going to be covering where the options chain is going, as well as when future buy signals and sell signals happen on Ortex and Lux algorithm. Lux is giving you an ability to be able to jump into the buys and sells, makes it easy for traders, beginners, and experts, veterans. Maybe it's you. So make sure you get 20% down in the description, 30% off of ChatterQuant. And if you guys like the Sleepy Meatball over there, make sure that you guys have already slapped that like on this video and checked out a new one. I want to be able to say thank you to those of you who have been keeping their eyes on the markets as well as I am. I'm on Andrew Mo Money on Instagram, on Twitter, and all over the internet. So if you guys want to follow, it's the best way to be able to be eligible for future raffles as well as giveaways, which we will be doing soon on the Instagram and Twitter. So make sure that you guys have already followed there. I hope you guys have an excellent day, and I want to thank those of you who have pressed the Patreon button down in the description or the join button next to the subscribe button. And I hope you guys have an excellent Sunday. We'll see you guys in the money. Peace.